Let's get some stocks on the move today. Bristol Myers buying Nvidia's latest AI computing system for drug research. So, right, you own both of these. It was kind of speaking also to what Shannon was talking about with regard to the broadening of the AI trade to other sectors as well.
I think you're going to see more and more companies do this, especially in healthcare. We know Thermo Fisher does this. We know other companies are doing it in healthcare. This is one of the best ways to be more efficient. You have raw computing power, you have all this data, and you have scientists who can use it. So I think this is really helpful, and one of our big themes on the healthcare sector is the efficiency and the ability to get products faster to market.
Yeah, Bristol Myers shares not moving too much, down about 0.2%, but definitely one to watch for further implementation. Boeing CEO Kelly Ortberg telling CNBC that the company will need, quote, a couple more years to repair its finances before launching a new commercial jet. Joe, this is one you own.
Yeah,
down 1.8%.
So let me be clear. The reason that we have this position in the ETF is solely based on momentum. It was a position that we established at the end of April at 229. That momentum, if I'm going to use a green light, yellow light, red light type of signal, it's definitely solidly yellow, teetering on being red right now. So I can't sit here and advocate for some fundamental story that really wasn't the reasoning behind us taking the position. It was based upon momentum. Maybe you get a restart after earnings, which I think are July 28th. I'm not sure there, but right now it doesn't categorize itself as a momentum.
Yeah, down about 3.2% year to date. Lockheed Martin planning a new bargain rate Patriot missile to replenish low stockpiles. Joe, this is also one that you...
Another example of a position that we just took at the end of April. When I cite when we just take a position within the last 90 days, it has this prove itself element to it.
Yeah.
You want to see that the momentum builds. And in the case of a lot of the defense names, that's not exactly what you're seeing. We have ownership. Some of the better names have been General Dynamics. That's a good one. But Northrop Grumman, Leidos, not working well for us. Lockheed Martin, yellow light, best way I could define it. I think there's fundamental challenges in front of all these defense names as it relates to some of the budget concerns. They need a catalyst, and maybe getting past the midterm election ultimately is the catalyst, and we'll see budget become more favorable for the defense names because they've struggled, and I think it's been surprising that we've seen the struggle in defense names.
So you'd say Lockheed caution, maybe.
I like that.
There you go. Moffett-Nathanson saying it's going to get worse for Uber before it gets better. Sarat, you own it.
We do, and if you look at the stock chart, you go back a little bit, it almost hit 100, now it's back into the 60s and 70s. We trimmed a bunch of it up in the 90s. Now I'm actually getting very interested in this level because they also just did an acquisition over in Germany.
Right.
And they're trying just to use it more as a super app. And yeah, we know the danger, or let's just say Waymo and all the others are coming at them. But at the end of the day, Uber's an international company that's growing. And I think as the app gets bigger and bigger, it's a company that we're watching for and watching for the cash flow earnings to grow.
Definitely a beneficiary of scale, one would think. Weiss, you sold it a few months ago. So you buy this idea that it's going to get worse probably before it gets better?
I just think it's going to continue to be dead money. There are lots of things going on here. First of all, you've got EVs coming on, so you've got a lot more competition that's coming out. And they've not been able to really hit their earnings over the last, I think, about a year. I think one quarter in there they did. So I don't know why I have to own it. I own it because of scarcity value. That's out the window right now because you've got Waze, you've got others that are coming onto the market. And I just don't see where it's an attractive holding here. There are other ways to let your money die.
You mean AVs or EVs as competition?
I'm sorry, EVs and AVs.
Okay.
EVs are important because we're seeing gas prices going up.
Right.
And while Uber doesn't pay for the gas, the drivers do. So drivers are going to want more money. And I think that's going to be here to stay for gas for a while, as long as we're in a situation with Iran, which there's no sign of that ending anytime soon.
Understood. BMO downgrading Charles Schwab to neutral. Joe, this is another one that you own. Stock's kind of up about 0.5% right now.
Yeah, so we'll hear from them within 24 hours, I believe. You're probably, consensus is $1.55 on EPS, 6.92 on billion. I think net interest margin looking somewhere around 2.98. You would have to think, given what we've heard so far about the trading environment, that they are benefiting from significant retail engagement. Stock has been somewhat disappointing year to date. We've owned it for quite some time, so we're doing well on it. But you would like to see this earnings report be the catalyst to take it to a new all-time high, get this stock above 107.5, pushing 110, 115. And let's see if the retail community can be that catalyst in the earnings report.
Yeah, we saw with Morgan Stanley last week, E-Trade, their entire wealth division took in $148 billion, which was 3 times the comparable period last year. A lot of that
Schwab has already responded off of those reports with a rally. So now you're ramping up the expectations a little bit higher.
Yeah, it's amazing how much of a role IPOs just play in that interest level and those flows.